and welcome to another episode of Classroom. We've been talking about commodities lately, but let's switch gears this time round and talk about a term that you hear probably every day that you watch this channel, but not everyone understands in detail. Technical analysis. Why is that important when looking at the stock market? How do you make it work towards your own side, and what exactly does it entail? Dr. C.K. Narayan joins in to talk about that. Dr. Narayan, good to have you on the show as always. And first up, definitions for technical analysis and how it works within the price and volume parameter.
Technical analysis, basically you define it as a study of market action. When you're saying market action, you're essentially meaning prices and volumes, because those are the two variables. And when you add the word study, you're actually talking about a structured approach. So what technical analysis really is a kind of structured approach towards reading prices and volumes. Since the market speaks to us through only these two mediums, it's very essential that we know how to decipher what it is saying, how to understand what it is saying, and then subsequently how to apply what it is saying, so that we may seek to benefit from whatever the market is doing or about to do. So that is what is the focus of technical analysis, and it functions mainly by looking at prices and looking at the past trends of prices, looking at what prices are doing in the present, and then trying to massage both these data together to make a reasonable forecast for what the prices are likely to do in the future. Volumes are going to support this reading on prices. So the volumes are essentially a kind of a confirmatory indicator, whereas the price remains like the primary indicator.
The ground rules are the same for any market or any stock that you would apply this to, right, Dr. Narayan? Whatever works for a frontliner like Reliance would work for a mid-cap like Gujarat NRE Coke as well in terms of trading parameters.
Yes, indeed, it would. See, the basic proviso that we have is that the stock should be reasonably well traded, in the sense that there should not be any kind of manipulation. Wherever manipulation exists, nothing will of course work, and that includes any form of analysis. But the study and application of technical analysis presupposes that there is a freely traded market where people's emotions are at work and they are in the process of giving vent to their feelings and emotions through the medium of prices as they buy and sell based upon various sets of considerations, which is unique to each one of them. So it would be applicable to any stock which is well traded. It is also applicable to stocks which were hitherto very poorly traded but now are trading better. Let's say a recent example could be something like a Colgate-Palmolive, which in the past used to be a very, very thinly traded stock, but you find these days that it's been traded pretty well. So, earlier time you would be a little hesitant in applying it to a stock like Colgate, but once the trading volume picks up, then it is possible to apply it to a Colgate or, like you mentioned, a Gujarat NRE Coke also. So it really doesn't matter what is the vehicle. The only thing that we require is that it is well traded and freely traded.
You mentioned history as well, Dr. Narayan. How important is that, the history of the trading pattern of the stock, aside from the here is as is price of it?
See, history is really the only thing that you have, right? For any stock, for any sort of analysis, we always analyze the back data. So the more the data that you have in history, the more firm a footing your analysis on. In the sense there is a lot of patterns to look at from the past, patterns in terms of what prices have done, patterns in terms of how the volumes are waxed and waned, and also established patterns in terms of how the stock will actually respond to whatever events and news which will happen. So it's very, very essential that you have long history for you to do a proper sort of analysis using technicals. It's very difficult to do technicals on a newly listed stock because there is no history. So you'll have to find out a very different way of trying to apply technicals to a newly listed stock as compared to something which has been around, let's say, 20 years.
Okay, let's talk about the most oftenly used term when talking about technical analysis, which is the trend, and the term that's used most often, which is that the trend is your friend. What does that mean?
Well, trend, when you define trend, what it really means or what you're trying to say is that there is a certain directionality to the prices which is consistent through time. Now, a trend is something that everybody talks about and everybody has in mind when he's actually discussing a stock. When you say short term, medium term, long term, you're actually trying to talk about the existence or persistence of a trend or a directional movement through a certain period of time, which could be days, weeks, or months, or years. So as you increase the period of the length of the period that you're trying to refer to or that you're trying to address, the trend changes from a short-term trend to a medium-term trend to a long-term trend. And the phrase or the cliche of the market is that the trend is your friend, right? And which essentially means that if you stick with it, that is when you are likely to make the money out of the market. Because if you were to long a stock when it is at the level of let's say 100 rupees and the trend runs up till about 300-400 rupees, if you make the trend your friend, you are going to stick with the stock until it finishes the whole rise up to 300-400 rupees, and then when it turns around, that is when the trend changes. That's when your friend is letting go of you, and that is when you let go of the stock. So trend as a friend is another way of saying that you should stick with the prices until the directionality part is clearly signaled as being over. So trend as a friend is a cliche. I'll only add one more, let's say, rider to it. Until the end, when it bends. So a trend is your friend until the end when it bends. So when it bends is the time when you let it go. Up until that time, you keep friendship with it.
Okay, that's an interesting extension.